Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 15th of March. Today, the highlight for financial markets will be the FOMC rate decision. This will be one of the bigger meetings that also includes updated forecasts on the US economy, projections on the rate path, as well as a press conference by Chair Yellen. The committee is widely expected to hike borrowing costs, with the probability for such an action currently resting at 90% according to the Fed Fund futures. This percentage skyrocketed from 26% following an unexpected string of hawkish comments from several committee members who noted that the case for a near-term rate hike is very strong. Considering that the hike is almost fully priced in, we don't expect a major market reaction in case the Fed simply acts as expected. Investors are likely to quickly turn their attention to the updated dot plot for fresh signals on the rate path. We expect the dot plot to remain unchanged at this meeting, but we see the likelihood for an upward revision in coming months. Our view is based on the fact that Chair Yellen recently indicated that the pace of future hikes will be faster than previously. What's more, as uncertainty around fiscal policy dissipates, we expect policymakers to incorporate in their forecasts expectations for stimulus at a larger degree than previously. As for Yellen, we expect her to maintain the confident tone she adopted in her recent speeches, which could increase speculation for faster hikes and thereby support the greenback. Dollar-yen traded somewhat lower yesterday after it hit a resistance at 115.10, but the decline was halted by the 114.50 support. The pair has been trading in a sideways range between 111.60 and 115.50 since the 11th of January, and thus we believe that the short-term outlook remains flat. Nevertheless, an optimistic Fed committee today could push the pair up for another test near the upper bound of the range at 115.50. If the bulls prove strong enough to overcome that hurdle, then we may experience more upside extensions in the aftermath of the meeting, perhaps towards the 116.35 resistance level. The other key event today will be the elections in the Netherlands. One of the candidates that gained a lot of popularity among the Dutch people is Geert Wilders, the leader of the far-right Party for Freedom. The cornerstones of his campaign are to end immigration from Muslim countries and to call for a Brexit-style referendum on the nation's EU membership. Therefore, investors will probably keep an eye on this race, as it could impact market sentiment overall, given the political risks the prospect of his election poses to continued European integration. Our view is that the likelihood of Wilders being elected as the next Prime Minister is very low, and the probability for an exit referendum is even lower. His party has to gain majority in the lower house for him to take over the Prime Minister position, but according to the latest polls, no single party is even close to achieving something like that. This implies that a coalition of parties is needed to form a government, so in case Wilders gets the first place in the election, he would still need the support of several other parties to become the next Prime Minister. This is unlikely because most of the other parties have pledged not to work with him. Even in the extreme scenario of achieving a coalition and getting the majority in the lower house, Wilders will still need a majority in the upper house before being able to even call for a referendum. Bearing in mind that his party currently holds only 9 of the 75 seats in the upper house, that outcome seems highly unlikely. Now, in terms of market reaction, the yield spread between the Dutch and German 10-year government bonds has narrowed recently to near 10 basis points, which suggests that the financial world is not particularly worried about Wilders and his party. As such, we do not expect a major immediate market reaction in case Wilders does not manage to gain the first place. The euro may turn up again, and euro-dollar could emerge back above the 106.30 obstacle in the aftermath of the election. Such a break could initially aim for the next resistance of 10675, and if buyers manage to overcome that zone as well, then it is possible that the pair will test once again the 10710 territory marked by Monday's peak. Now, in case Wilders is crowned as the winner, even if he does not manage to establish a government, his strong showing could add momentum to the campaign of the French far-right candidate, Marine Le Pen. As for the euro, Wilders' victory may cause the pair to give back more of the gains it posted following the recent ECB meeting, and in combination with a rate hike by the Fed, this could push euro-dollar gradually lower for another test near the key 105 territory. As for the rest of today's data, from the UK we get employment data for January, and in the US we have CPI and retail sales both for February. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.